Felix here. And so Lula's just told me that there are $97 trillion of debt missing. And if it wasn't coming from a good source, like my cat, I wouldn't believe it, to be honest with you. And I think it's worth understanding this. And it's not one of these doom and gloom, the world's going to end videos. That's not really what we do here. But it's something people are not talking about, and people don't want you to talk about, people don't want you to know, because it could be another global financial crisis. And it's important, I think, to understand how these things are set up, what you can do about it, and how you can balance cats on your shoulders. So, of course, none of the following is financial advice. It's just my opinion, my take on it. And I'll show you and I'll share with you the exact sources that I read, so you can look at it yourself. In fact, I linked to it down below. So let's get cracking here. So $97 trillion missing. How is that even possible? And am I making this up? No. This is a screenshot from the Bank of International Settlement, not the sexiest of organizations. They don't write short reports or, attack anything. They are a bunch of old bankers, and they are worried. And they literally call this huge, missing and growing dollar debt in FX swaps and forwards. And what the hell is that? Well, essentially, people use them to hedge their currency exposure. So the dollar is essentially the middleman for pretty much every currency transaction in the world. And these are exactly the kind of products that were bailed out, they say backstopped, in 2008 and 2020 by central banks, acting on little information about who owed the debt. And they didn't have time to find out, because if you had looked that deep, you'd never know. You've no idea how it functions. Therefore, they just thought, well, if this stuff people don't pay, then the world's going to end. So let's just bail them out. And it's gotten a lot worse. So 3 charts here. By maturity, there is about 93 trillion or so here in these products. And we don't need to super understand what they actually are. We just need to be aware that they exist. So payment obligations from this are staggering. And this is, the Bank of International Settlement, it's like the Fed telling you that something is staggering. It's staggering that they're saying it's staggering. Considering all currencies, outstanding amounts at the end of June reached 97 trillion, up from 67 trillion in 2016. This matched global GDP and was 3 times global trade. It exceeds both global external portfolio investments and international bank claims at the end of 2021. And it's basically all in dollars. And what does that mean? Well, it's the Fed's problem. It's a US dollar problem. To put this into perspective, the Fed printed a lot of money, right? Well, before COVID, the Fed had about $4 trillion of money. It sort of magicked up. And then at the peak of the money printing, it was about $8.9 trillion. So they magicked up, and that's what's caused the current inflation, in my view, 4 trillion. Now we're talking here 97 trillion. So I don't even know what that looks like and how many zeros that has. It's insane. And it's not on the balance sheets of banks. And that's the worrying part, because that sort of sounds familiar, doesn't it? On balance sheet debt of non-banks outside the US, so your pension funds and so on, is about, give or take 12 trillion, I presume this is. So 12 trillion. The off-balance sheet stuff for pension funds and so on is about 24 trillion. Worried yet? I'm sorry to worry you, but I think it's important to understand, and we'll talk about what we actually do about this as retail investors here in a second. And then non-US banks, so international banks, again, on balance sheet debt is about, give or take 14 trillion, and the off-balance sheet stuff is about 40 trillion. So these numbers are staggering, right? They're hiding most of their payment obligations off balance sheet, and regulators are like, we don't really understand it, so I don't really want to mix with it. The Bank of International Settlement says off balance sheet dollar debt remains out of sight and out of mind, but only until the next time dollar funding liquidity is squeezed. Then the hidden leverage in pension funds and insurance companies, generally supposed to be long only, could pose a policy challenge. That's a very, very polite way of saying hell will freeze over. And policies to restore the flow of dollar would still be set in a fog, as in we haven't got the faintest idea of who owns this stuff and how we actually fix it. They would just chuck money at it. That's all they would do. They would literally just flood the market with as much liquidity as possible, trillions and trillions of dollars, like they've done during COVID, and they'll tell us it'll all be fine. It won't really do anything. So am I worried about it? Yeah, it's definitely a concern. I think there is a real potential here for another financial crisis down the road somewhere. Quantitative tightening might do it because that removes liquidity, and you don't really want to be doing that. And there was a very significant paragraph in the last Fed meetings on precisely that. So watch out this space. And liquidity, you always think, well, the US financial market is big and all of that. It's not going to happen. Well, Blackstone's REIT is not paying out. If you own it and you sell it, they're not going to sell it. If you apparently are now in another Blackstone credit fund, same situation, no liquidity. And that means you can't sell it. They're not going to pay out. It's a bit like a crypto bank, isn't it? A platform, a Binance, an FTX, same sort of situation. Apparently Starwood REIT is in the same situation, that they are not paying out what people want to pay out. So this gets you to this, you can't sell what you want, so you have to sell what you can kind of situation. And it's the classic old bank run model, isn't it? And that's what we've seen with crypto here. So crypto is tiny, right? It's $1 trillion or something. It's almost irrelevant when you look at this stuff that's actually happening in the real financial world with the grown-up bankers. And that's where the real problem sits. And regulators got their head in the sand, don't understand it. So what can you do about it? Well, one thing I think you can do about it is don't have that much cash in the bank, because I think banks are potentially at risk. Now, you might say they're going to get bailed out. True. So what do you do with the cash? Honestly, put it in securities. I think it's going to be safer. Treasuries even, which is a funny thing to say because they'd come under, there'd be loss of liquidity there. So maybe that isn't the super idea either. But yeah, I have a certain distrust towards these organizations. And yeah, I have a certain faith that they'll try to bail it out, because nobody wants the end of the financial system and nobody wants another 2008 either. But it's quite possible that it's going to happen. So markets, do they price this in? Not really. At the moment, I think we are much more worried about an earnings recession. And what this chart shows is down here are puts. Puts are generally thought of as an instrument that people buy when they think the market's going to go down. And there's some serious volume here, right? You see all these spikes, very serious volumes at all the major expirations. And that means the market is expecting us to go anywhere to, this is the SPY 338. There is also, sort of hedging all the way down. And it could be hedging, or is it people turning really, really bearish? Like, I turned a little bit bearish last week, and we've set up some trades yesterday that were a little bit bearish. And I'm super happy to show them to you. I always do all of my trades live. So here are a couple of them. Here they are indeed, if you want to see what they are. So we do a live stream every week usually, where I live trade and I show you guys exactly how I do what I do. Doesn't mean you should be doing it, but it's worked relatively well this year. We're up 144% this year, so I say relatively well. That's a joke. It's worked insanely well this year. It's worked insanely well for a significant period of time. But this year was a challenging one, so I'm very pleased that our model works. And you can learn more about that. I'm not promising you 144% returns. I think that would be silly, but I can show you exactly what I do, how I do it, what my risk management structure is, what my rules are for getting into trades, out of trades, and all of that. And then you can practice that in simulated trading and so on, and you can decide whether or not this is something for you. We have 2 ways of joining us. If you have a 5-figure portfolio or more, 6, 7, 8, 9, then you can join our coaching program at felixfriends.org/coaching. If you're not quite there yet, if you're just getting started, also absolutely brilliant. It's amazing to get started. We have got a course with about 100 lectures plus. Again, you get to watch me trade live every week at felixfriends.org/options. And I've done every single one of my trades this year, either on a live stream or I notify you guys straight away in our private channels. And I don't do that so you can copy trade, because I'm not a big fan of that. I think that doesn't mean people don't learn anything. You're just relying on me. But I do it so you can learn from it. I think that's really it. See some real life theory, strategy, protocol being put into practice and how that really functions and how that really works. And you see my rubbish trades and you see my great trades, like warts and all. Especially when I lose money, which happens occasionally. We lost money in September, but we made it back and then some. And it's super important because we actually learn the most from our screw ups. So it's very, very important. And they were screw ups. So it wasn't actually the system's fault. It was just me. So I'd love to know what you think about all of this. Are you just sort of like, whatever, it doesn't really matter, well, if this happens, what am I going to do about it? Or are you actually concerned about it? Are you setting up maybe hedging for your portfolio, which is also one thing that we teach? You can actually, for a relatively modest fee, hedge your portfolio, just the way big banks do, just the way hedge funds do. So there are things that we can do. And I'd recommend you look into it. I genuinely appreciate you watching. If you enjoyed the video, give us a thumbs up. I would truly appreciate that. This is not going to be the world's most popular video. I get that. But I felt like sharing it.